Hey everybody, welcome to the garden. I hope you're having a great day. Shout out to the lemon and lime lovers and everybody in between. It's time for the crypto market recap. Let's hop into these charts, see what the story is and what it may be. And remember, if you're interested in any of the services I provide, please check the links in the description below for both the Patreon and Discord. Okay, so firstly, my apologies if my voice sounds a little off. I am losing it. So, again, I'm sorry if it sounds a little weird. I'm going to try and talk as clearly as I can. I'll probably be talking a little slower. If this video goes a little bit longer, make sure to check out the timestamps in the description. They're always there if you just want to hear me talk about something specific. But overall, I'll try and be as tight as I can with the video. But I'm going to go over a few things. It's going to be a lot more information than normal, I would say. Of course, we're going to be going over crypto. We're going to be going over the positions we're in, the new positions I actually opened, and then other positions I'm eyeing potentially, opening up in the future. But before that, I do want to talk about the FOMC meeting that happened yesterday with the Fed, and I want to talk about the U.S. indices, the U.S. The Dow, the S&P, the NASDAQ, and I do want to talk about the dollar. Okay, that's going to be a very important discussion, and the dollar is going to really tie into the FOMC stuff. So I'm going to talk about the dollar FOMC together. Firstly, let's talk about the Dow, S&P, and NASDAQ. So looking at the Dow today, very important day for the Dow. It actually made new lows on the year, right? So we took out the 2022 lows, and we end up closing just under them as well, and we're closing right on top of a very special pivot level. This pivot level is actually the high pivot prior to the COVID drop, right? So now the Dow's finally retraced all the way back down towards this level where it broke out from, and now we have a full retracement back down to this level, and it's very unlikely to hold. All right, it's very unlikely to hold for a few reasons. I'll tell you why, but just looking at technically, it technically already started to break down of it, closed just under it, has not confirmed under it, but with the fundamental stuff that's happening, it's likely at least next week or the week after, it will eventually break lower and will continually make new lows on the year. All right. So far it's been following my squiggly lines. However, it has gone above my expectations on how quickly it dropped. I was seeing more likely a consolidation attacking this level, but there just really has not been that much force on the buy side to push the Dow, and that goes for the S&P and NASDAQ as well. So overall, a very bearish day for the NASDAQ, but it's not completely unique to the stock market. Obviously, crypto's been as bearish or even more bearish in some cases. So the next key levels we can see the Dow getting to, what I will say is probably where you'll see like a pretty significant bounce level is going to be these high pivots here, but really down here, right? So pretty much this level here is going to end up being a pretty nice bounce level. It might even bounce all the way back up towards this high pivot level at 29,600, we'll say 29,595. So, do look for a hopefully a nice relief bounce there. Might be a little relief rally, but eventually will give way. We will see that breakdown, pretty much looking like this. Oops. Looking sort of like how I have it drawn here, getting towards here, and then eventually making its way towards the top side, and then it probably will start to X out here and break lower. Okay, which is totally natural on how the breakdowns happen. One of the reasons why I'm fairly confident you'll start seeing structures like that is because the entity that is selling most of, or at least putting most of the selling pressure into the market is the Fed, right? So the Fed has been buying junk bonds pretty much since 2020, the crash, the COVID lockdowns, and that's what this whole move up was. So for both the Dow, for all three, the Dow, the NASDAQ, the S&P, you'll see these pretty aggressive channels up, and that's mainly because the Fed pumped so much money into the markets. But now with them raising rates, they're forced to lessen their balance sheet, and they have to pretty much take out most, if not all, of these gains. So you're likely going to see a continued drop going for the foreseeable future, anywhere from 70% of this move to maybe even 90 or even more. Right, I'm leaning more towards 90% retracement, so coming all the way back down towards 20,000 for the Dow. Right, it's that extreme. It's that extreme. I do see it happening over the next couple of years. The Fed has pretty much reiterated their strategy yesterday, and they have not backed down. So it's very likely that's what's going to happen. We will have, of course, relief rallies, bear market rallies, dead cat balances. So you'll have opportunities to play upside moves, but in the end, it's more probable at this point that you're just going to see in the foreseeable future just more and more downside, at least until most, if not all, of this is taken out. All right, let's take a quick look at the S&P and the NASDAQ next. So very similar, like I said. So here's the COVID channel. I have it drawn out on the S&P, and in my opinion, it's very likely that this is going to get taken out, and the S&P is going to make its way towards the fair value channel. This is the fair value channel. Pretty much, it's the channel that it's always been since its creation, right? Since the beginning. You can see how volatile, how crazy the Fed made the markets go when they started, printing and pushing all this artificial value into the markets. So it's very likely you're going to see the S&P break down and get back into this channel. And I think at the very least, it'll get towards the top of its COVID peak here, right? So this is the high pivot prior to the COVID lockdown drop. So it's likely to get there. But I do think, of course, it will break under there and get at least towards the median line here, at least. All right, it's possible to get all the way back down towards this bottom part of this rising channel, but at the very least, it's likely to get towards this median line here. And in doing that, again, that's not a bad thing. That's actually a good thing. It means the markets are correcting themselves. It means that things are becoming more affordable. Things will become fair value. So in the end, it may hurt in the short term, but in the long term, it's what you want. If you want health to come back into the markets. We'll talk about my fears in regards to the dollar and how this is going to kind of play out once I get to the dollar. But essentially, the SP is doing pretty much what I thought it would do. It pretty much is following the red path here. I had 3 different paths I drew out back in May, and so far it's been following the red path. It did, again, kind of like the Dow. The Dow was well under my expectations, where it didn't have enough juice to get bought up more, whereas the S&P had way more juice than I thought it did and got bought up way higher. I didn't think it was going to, once it got towards these levels here, I thought it was going to start stalling out at 39.63 or 39.64, but it blew right through it, got all the way up towards the top side at 42.45, but then eventually gave way and pretty much ended up going towards the same level I'm thinking it's going to get to, which is the high pivot level at 33.94.4. So in the end, it's going to where I originally thought it was going to get to. And I do think it'll find some support there, but eventually it's going to probably break down towards the median line at the very least, because it's going to look to take out most of this channel. And comparing it to the Dow, it has taken out quite a bit. We're already, I would say, we're probably right at the halfway mark, but we've already gone a little bit past that. So the S&P is definitely moving faster. Let's take a quick look at the NASDAQ. So NASDAQ, again, similar. The NASDAQ it's actually even scarier, because this is a pretty steep channel, but then this channel here is also from the COVID rise up, right? So this is actually the high peak right here at 9,756 prior to the COVID drop. So that's going to be the ultimate target I see. But what's crazy is how steep tech went up, and then it prolonged higher and higher, and now it's got a very steep descending channel as well. I do see this channel riding all the way down, at least towards the high here, the high pivot here at 9,756. Almost broke through and confirmed through, but just started giving way and eventually just fell back into my green zone. Then could not get past it again and broke through. Now we're seeing at the median line again, due for a bounce level here. Definitely due for a bounce. We're in a nice level for a bounce, and the bounce could probably lead all the way back towards the median here. So anywhere from 11,500. If it moves really quickly, maybe even all the way back down up to 12,000. I do kind of see that being unlikely, but it's there. It's definitely there. Okay, just depends on how quickly the rise will happen in the NASDAQ. And hey, if we have these relief bounces in the indices, that will be very nice for other assets. It will give us at least some reprieve from all the selling. Okay, especially in crypto. But in the end, same story with the NASDAQ as the Dow and S&P. Likely all of this is going to get taken out, or at least most of it. My ultimate level for the NASDAQ is around 8,000. I do think it'll eventually just get to 8,000. It may go lower than that, but I think it'll be at fair value around 8,000. So, and obviously you have the technical levels over here. right? So this whole level here, 8,000 is the top here, and then it goes all the way as far as down as like 7,600, we'll say. So there's gonna be a lot of activity down here if it should get down there. But as long as the Fed continues to hold steady on its current policies, this is going to get taken out. If they change their policies, then obviously things will change, and I'll discuss it. But as of right now, they reiterated yesterday, they're holding steady. All right. So now let's get into what the Fed said and the dollar. So this is really important. Obviously, you're seeing the chart of the dollar, and it's incredible, right? It's absolutely incredible. Before I look at the actual technicals of the dollar chart, I'm just going to briefly go over what I took out of the FOMC and what I found to be the most concerning. So, if you have been following the Fed, pretty much ever since they started, raising rates, their target Fed funds rate is 2%. Currently, we're over 3.5%, I believe. We're nowhere near 2%. Okay, we're nowhere near 2%. So their attempt at raising rates is to get their Fed fund rate all the way back down to 2%. And yesterday, with the FOMC data, they released pretty much the projections going all the way out to 2025, and excuse me, it was very bad. It's very bad. So pretty much the average rate hike was going to be anywhere from 50 to 75 basis points per hike. So they showed that was the average rate they showed going all the way out into 2025. So they extrapolated that all the way out until 2025, which was shocking enough. No one really expected it to go all the way out until 2025. Everyone's expectations were that it was 2024 at the latest, that they would do all the rate hikes and then finish. So they're saying no, it's going to be technically like 3 years, right? So it gets even worse. The data they showed, by the time 2025 rolls around, they did all the rate hikes that they projected. It still showed that the Fed funds rate would be above 2%, would be at 2.1%, which is massive. You might think 0.1 is not huge, huge, and technically in the scheme of things it's not, but it's a big problem that with all the rate hikes they've done and all the rate hikes that they're planning and projecting to do, they still can't hit their target. So that was very, very negative. That was something where we were, I think many people, including myself, were pretty much baffled. Like it was an aggressive. They were very, very aggressive with the rate hikes that they were projecting to do. So it does feel like control has been lost, and it almost feels confirmed. Again, you don't want to go too hyperbolic on your opinions. You want to, at least for me, charts are the king. I do just follow the charts, but I do have to admit that that projection was very negative, and the markets took it as such. So that FOMC meeting did not do the market any help. But the truth is, we might be in store for a couple really tough years, whether you're in the U.S. and especially if you're outside the U.S. So we can actually see that here in the dollar. So let's go to the 12-month chart real quickly on the dollar. Okay, so the 12-month chart on the dollar is very, very bullish for the dollar. Okay, that's not a good thing, especially for foreign people, right? So if your currency, which most currencies are tied to the US dollar, it's going to be very hard going forward. It's already hard, but unfortunately it looks like it's going to get even harder. Okay, because what we're seeing here is pretty much what the Fed is saying they're going to do is playing out in the dollar's chart. They're projecting for the next 3 years they're going to be raising rates, so that means the dollar's going to probably get stronger because foreign currencies are collapsing against it. So you're seeing foreign currencies dying against the dollar, which is causing the dollar to melt up, and that causes a demand for the dollar. And what's interesting is this is all coinciding with a massive real estate crisis happening in China. Okay, there's a massive real estate crisis happening in China with Evergrande. A lot of people aren't following that story anymore, but it's actually become worse. No one's paying the rents over there. So this is unfortunately a perfect storm for crisis, because you have all these financial indicators saying we're going into what I would say is a global depression, and then you have the potential for a world war coming. There's a whole bunch of very negative variables kind of coming all together at once, and the dollar's chart is showing that. So this 12-month chart breaking this level here, this was a multiple year descending trend line level, clearly broke through, having an incredible year. The dollar being up almost 20% a year is insane. broke, has been breaking through the levels, now approaching, I would say, major levels. You have this is a major weekly level, the 114.88, where it's just under there. And then obviously this is the high pivot on the monthly, which is 121. I actually don't see 121 being a major level. It will be a level of where you'll probably see price have some interaction, but the major level, guys, is 126 210. Okay, 126 to 127. This is major. Okay, if the dollar gets there, I do actually see a pretty significant pullback. However, just know the pullback may last months to even a year or maybe even longer. It is bullish. It is extremely bullish. If you're gonna see the dollar break past this high pivot, get towards this level, and starts having a pullback that may make a higher low. It very likely will. It can come down very low. Okay, it can come all the way back down to even right around here at 100. Okay, and it still will be bullish. Okay, it still will likely be bullish, because if it does show bottoming here, it's just making a higher low, right? I didn't draw this that cleanly, but you get my drift. It's making a higher low after it made a higher high, and that's indicating that you're going into a bull market for the dollar, and that would probably last a decade, and that is really coinciding with what Jerome Powell was talking about yesterday. It's really coinciding with the data they released yesterday, that we could be looking at a bullish dollar decade, and that will probably be an indication of a global, at best a global recession, but most likely a depression. All right, I'm not trying to be hyperbolic, but I have to tell you what I see. This is extremely powerful. We have 3 months left of this 12-month candle, and in breaking this level, this structure looks incredible. If this was not the dollar, I would probably already be in this thing, but I would be looking for a entry to long. Okay, for multiple years. This is an incredible structure, and it looks like if it does play out how I'm seeing it, you will eventually see 136 get touched and taken out, and then you'll eventually see this stuff get taken out. I do think if this happens, you're seeing the dollar come this high. I do think at that point there's a lot of fundamental things that have changed. I think the dollar's probably going to be dead by then. Okay, just because things are going up doesn't mean the dollar's going to be healthy. It just means what we're seeing is foreign currencies are dying, right? So you're seeing foreign currencies die into the dollar, that causes it to melt up. This does not mean that the U.S. dollar is going to be, the one surviving thing. It kind of means the opposite just a bit. Okay, there may be a time where the dollar is extremely strong and things are cheap. I don't see that happening, but it can. But in the end, if it's foreign currencies collapsing into the dollar and that's causing the demand for the dollar to rise, then it's likely going to lead to the end of the dollar once enough currencies die against it. Okay, because then you'll have a liquidity crisis. There won't be enough dollars, which is crazy. There actually won't be enough real dollars that are backed by something. That will cause the currency to go away eventually, or at least a reshuffling of the currency's value. So we are going into a very interesting time. But if you are foreign, and even if you are a U.S. Someone in the U.S., be as wise as you can. Just don't be foolish. Don't be foolish. Things are hard now, and they're gonna get harder. I can actually promise you that. This is incredible, this structure. All right, so let's hop into crypto. Hopefully I didn't bring too many of you down with that, but I had to I have to be honest what I see. So let's hop into crypto now. So starting off with Bitcoin, again, as we could see, broke this rising structure short term, and now is playing around this general zone of support at 19,930 to 19,000, right? So it's still holding the general zone of the 2017 highs. I do see it eventually breaking lower. We may see a rise back up towards anywhere from 21,000 to almost 22,000. I don't know if it'll actually get past this high pivot here. It definitely could. If it does, it's going to have some trouble with this descending blue line here, which is it's a kind of a secret trend line, I would say, but in my opinion, you'll find this trend line to probably be a little bit more important than it looks. Has a lot of interaction with price going back. Okay, so I do see that probably will play a role. It's not a major resistance. In the end, major resistance will be around 24,000 to 25,000. But if price does get back up towards this level, it's very likely you're going to break higher and going all the way up towards at least 27,000, but most likely towards the 28-30,000 zone. All right. So I don't see this happening right now. I actually don't see that happening right now. I think it's more likely we're going to see another drop, another leg lower, going towards 16 to like 17,500. So this zone here, I do see being that next major level. But if we do have a pull, if we do have a rise back up, short term 21,500, 21,800. Anything past that, I'm actually gonna get pretty short term bullish, and we'll probably see a break past this high pivot level. Going towards 26, 27, 28, and then eventually 30,000. It'd be very hard to get past 30,000. Be very, very hard to get past 30,000. All right. So we've been long Bitcoin forever at this point, but that's okay because we're in plenty of altcoin positions, as you can see. We've closed out plenty and we've made our money. So a lot of our risk has been covered, but in the end, we're just sitting in this trade. It's not a big deal, and we'll see if it gets down towards these lower levels. I have add-on levels already planned out, but we're not there yet. We're not there yet. A lot of crypto has not reached my add-on levels. If you're a member in the Lemon Garden, you've seen I actually added on to a bunch of stock positions, and I opened I think 1 or 2 new stock positions. So the stocks definitely provide a lot of opportunity today. Crypto has not yet. It looks like it will eventually, though. I did open up one position, though. One new one. All right, so Polkadot, same thing as Bitcoin, broke the rising structure, holding this bottom pivot. Actually holding this bottom pivot better than I thought it would. Okay, this was a very nice day yesterday, which, again, was interesting to see that, crypto had a bit of a rally yesterday. Very small, but it was there. A lot of that is, in my opinion, it's because the markets have sold off so much. So it's a technical bounce, and it's also a trap. There's going to be, I think we may even see more upside to trap more retail. A lot of the big money understands that they have to start, if they haven't already, which they probably have, but they're going to have to continuously deleverage and continuously just chase the risk off, right? They can't have crypto, it's too risk on. And it's not going to perform well against the dollar. The dollar will destroy these cryptos. They're not going to rise anywhere near as quickly. So a lot of the big monies are gonna they're gonna do their best to have nice bounces, nice key bounces at technical levels to then sell as much liquidity as they can to try and de-escalate their size. And then let's take a look and just looking at the dot a little bit longer. It coming back to $7 is not crazy. It's not out of the question. It is holding the range, right? So this bottom right here at $6 is the bottom end of the range, and we actually saw that get tapped just under, right? It fell all the way down to like 5.97. But could not close under there, so it's still holding this range. It's so we can't assume that we may actually see it rise all the way back towards 750 and maybe even back towards the high here at $8. It's definitely possible, but we do have to respect this is just a range. If it does break past $8, let's say, or even get towards there, I will say it's likely going to take this high out and get towards $8.50. And that will make the structure look pretty bullish. It may have a pullback there if it can hold above $8, for a couple days, have a nice consolidation there, and then make another run towards 9 and change and all the way back to 10. Then we could be looking at something that's going to be a far more prolonged rise going towards $14. Okay, but there's a lot of work to be done prior to that. Again, it's more likely if Bitcoin does what it looks like it may be doing, have another quick leg lower. And then you'll see $5 get tapped, and then maybe even $4.50 get tapped for DOT. It's actually that's gonna be a really big level of demand, and I do see it coming all the way back eventually towards 6 and change, maybe even $7 in that environment. We'll have to wait and see how the actual charts look, as those levels are being tested. But in the end, if Bitcoin is going to have a slide lower, which it looks like it may, then expect the altcoins to do the same. But everything is oversold as well, right? Like everything in the end is oversold, so I would not be surprised if we see technical bounces happening everywhere. like Solana, as we can see, is up 4%. So technically, having a bit of a bounce. Cardano, very similar to Polkadot. Unfortunately, this trend line kind of keeps moving on me for some reason. But in the end, lost this support line, this rising trend line, and now it's holding support and holding the bottom of the range. And unlike DOT, it actually held the bottom range, didn't even tap the low of it. So Cardano's been a much stronger range than DOT, Bitcoin, almost anything we have here. And we're virtually break even at this point right now as well. So it's Cardano is definitely in what I would call a pretty tight squeeze. It's getting tighter and tighter and tighter. You'll see this high here, high here, high here, high here. So they're all leading towards lower highs, and then you pretty much are flat down here, right? So you're seeing kind of like a wedge formation here. So let me just draw that out real quickly. Hopefully I draw it cleanly. If I don't, it's okay. So essentially you're seeing like this sort of wedge structure kind of forming here. Very tight. Could lead to upside. It could lead to upside. In this environment, the probabilities are leaning more towards upside. The only problem is it's not in a vacuum, right? So like a Cardano, if I was looking at a vacuum, I would say, okay, it's likely you're going to see this break up. Not massively, but you'll see this break up. But the environment is currently in with Bitcoin and then the equity markets, this could get quickly invalidated and broken through, and test this bottom wick right here at 39, and that's unlikely to hold as well. Bottom wicks like this tend to not hold that often, but they tend to be retested all the time. So that's one of the reasons why I always have them marked. Because once you break them, they tend to be retested. They're great to either enter short at the retest, or if you took a quick stab long, to use it as an exit level. At least in my experience, that's why I tend to see. If it were to break up, past this level, obviously you're going to see the high pivot level here get tested. This is pivot zone at 58 cents, anywhere from 59 to 58 cents. And it'll probably take that out. Just looking at the structure, it's unlikely to hold as resistance up here, because you have like this bottoming structure. It's very likely you'll have like it looks like an Adam and Eve sort of double bottom. So you'll probably see a break past that level, challenging this high pivot level at 68 cents, 68 and a half cents, and getting all the way towards this level here. Okay, and that would actually lead to, again, kind of like how I was talking about DOT, indication of a bullish, extended bullish move after a retracement from here, something like that. Okay, again, so much work to be done prior to something like that happening, but the hints are there. It's possible. It could definitely happen. If we're going to have any sort of extended move to the upside, the structures are there to play out for sure, especially on DOT and Cardano. Avalanche is actually one of our free trades. So if you're not a member, actually this is one of the trades I gave for free as well. So yeah, we're probably in the red here. I don't know. I don't think it's by that much, but we are in the red here, I'm sure. Had this kind of expanding, almost microphone structure, expanding channel, broke down, and now is fighting around this. Kept challenging this pivot level here. Pretty important. Pretty powerful level here, as you can see. And from the denials, now having a bit of a nice, I would say modest rise, just looking under 2%. Had a nice day yesterday, though. Yesterday was 7% day, so pretty nice. And potentially, again, another potential higher low forming here, right? So we could be seeing Adam and Eve here. If that's the case, then hey, we may see some nice upside. And for Avalanche, what's interesting is I've always been targeting. I love structures like these, so these rising channels. What tends to happen with these is a retracement to them. Okay, or at least really close towards the next major level, so, or a next major fair value gap. So somewhere up here around $28 to $26, I'm telling you, if this does play out as the an Adam and Eve double bottom, you'll probably see price get towards here, and this will be a great place to close out the trade as well, right? So very interesting. Again, it's very early on. We'll see how these structures possibly play out. I will say the longer we start trading this action, kind of like curving down and then slowly curling up, the better it looks, for sure. The better it looks. So in the short term, we may get a nice bounce. So, and again, I do think that we are due for a bounce in the stock market. So I am looking towards next week, that we do have a fairly bullish week, at least for most of the week, and maybe towards the end of the week we can start going negative. We may open up the week negative as well. Mondays can be pretty rough if we get negative news on the weekend. I do see potentially a pretty bullish week next week, and that might indicate why we're seeing the price action kind of how it is now. But in the end, nothing's really changed in my opinion over the mid to long term. All right, so next is Solana. Solana. Solana having a very decent day. Actually, looking at Solana, this actually looks good to come all the way back up towards at least $37. Actually getting past that, I do think you're probably going to need to see Bitcoin having a bit of impulse past, through that level, and very similar to Avalanche, likely to test the bottom of this rising structure, this is more of like you can say channel, but this also has kind of a wedges formation as well. So it's very likely to test around this level here, depending on how quickly or slowly it may rise. But as long as it holds, these levels. So as long as it continues to hold this structure, specifically, it holds this low right here at $30. Solana looks pretty bullish in the short term. If you start seeing these cryptos start losing these levels down here, then it's all getting invalidated. It's very unlikely going to be any sort of double bottom or Adam and Eve bottom. So watch out. But overall, I do like what I'm seeing in the short term. In the long term, I mean, there's a ton of work to be done if there's going to be anything bullish in the long term. But I do like what I'm seeing overall in the short term, and this would be the zone I'd be looking at. Anywhere from, firstly, you want to get past $38. I do see that happening with all the consolidation down here. If we should challenge up there, and then eventually you'll likely see a rise all the way towards $42.50, and then maybe a bit higher, going towards $44 to $45. That will be very hard to break past. All right, it'll be very hard to break past there. It may, because then we may be taking out this high here, and again, just like pretty much like DOT, Cardano, we take out those high pivots. Well, we could potentially be seeing a more extended higher move after that pullback, going towards who knows where. Maybe just 65, maybe more, maybe all the way back up to 75. But that's a very, very large move. And I don't really see I don't see a lot of the fundamentals behind it, in the equity markets. For that to happen, I think we're going to need to have a prolonged bounce in the equity markets, or crypto's going to have to, pretty much deleverage itself from the equities, and I haven't seen any evidence of that yet. So BNB, one of the newer trades we took, we're decently in the money from there as well. Obviously, I have the levels I'm kind of interested in possibly taking profits marked. So we have about 300, 310, and then all the way up here at 330 to like 340 or 350. Yeah. So actually, BNB looks actually extremely bullish, right? So BNB has a very, very bullish structure, in my opinion. Broke this very, very powerful, very important descending trend line. Didn't just break through, then coiled down up top of it for months. And now is finally, over, I would say, since summertime, so since June, had almost a full 100% rise. Absolute incredible retracement back up. Found resistance at this zone here, at this major, this is like a weekly and daily pivot zone at 323. And so far, I'm liking the price action as it came closer and closer towards this decent support level at 256. So that's why I took the trade along there. And we may even get to see a bullish rise coming into this level here, pretty much attacking this high pivot, and then coming towards this level here, and then eventually maybe even trying to take out this high pivot here. I can't promise I'm going to be in the trade if this happens. I'll be watching the trade very closely once we get towards 300, or should we get towards $300. If I see any major weakness there, I'll take the money out, because we'll be in that's great profit there, almost 20%, I think. So now I'm not going to get greedy, especially in markets like this where, hey, all it takes is just one bad day and the stock market will just start dumping and crypto will follow. So you don't want to get too greedy when you're going against the overall trend, and the overall trend has been to the downside. Okay, but this looks great. If it does break down lower, I have the levels marked. I'm looking at 224, 210. I do think these levels will also play a major role. I don't think these were going to get just blown through. There's plenty of demand. This sort of structure, this sort of chart, we could either be looking at a rise here, or we could be looking at a much larger range forming here, a much larger consolidation. So either way, I'm happy with what I'm seeing so far. All right, so let's get to MATIC. So we actually opened up a short. I'm under the. I'm gonna be. This is gonna be a position that's gonna get built out. It's gonna take some time. So and we open up a short, and I'm looking at higher levels to add on to the short as it goes up. I do like it overall. Kind of similar to BNB, but I do see this being more likely going to be like a consolidation that will eventually break down. But I do like seeing the 92 level being tested at some point, and then maybe even $1.01. But it'll be very difficult for MATIC to actually break this high pivot here and get towards $1.24, $1.30. For that to happen, I do think Bitcoin's going to have a significant rally. It's going to have to be a very, very significant rally. So I am aiming mostly for this zone to hold overall. Okay, if it doesn't, I do have some levels I'm looking at around here. It's one of the reasons why I started so small. I mean, we just start with 1% of our portfolio here, so we'll slowly add on to the short, build it out as it may rise. And if it doesn't rise and it starts breaking lower, obviously one of my first levels I'm interested in looking at is 62, 62.20, and eventually go lower to break these low pivot levels here to chase the liquidity down here, which is going to be anywhere from 53 cents to about 44 cents, 45 cents. So that's kind of my thinking. Eventually, I do think it does come down towards these levels and take that out. And I think that's all the positions we're in currently. As you can see, XRP. We'll quickly look at XRP having a great day. XRP is one of my longest holds. I'm a big fan of XRP, as many of you probably know, and currently, pretty much just having a ball in 50 cents, just skyrocketing towards 50 cents, getting towards the major level of resistance up here, this red box. And this green box it's in is in my major. It's an accumulation box, pretty much. If you buy anywhere in this green box, you're golden for the long term, in my opinion, because I see XP being way more expensive in the future. But right now we're approaching the major resistance zone, which is the red box, which is pretty much lows of 58 cents all the way up to like 64 cents, just about there, right? So we're actually making our way there very quickly. If it comes in there really hard, would not be a bad place to actually open up a short. I'm not going to be shorting XRP. I don't really trade XRP, especially since it has the lawsuit kind of hanging over its head. Maybe that's changing because maybe some people know that's why we're seeing what we're seeing. Who knows? But as long as that's happening, I'm not really interested in trading it, because who knows? Maybe it'll get settled tomorrow or Monday. Maybe Ripple will lose. Maybe they'll win. Who knows? No need to trade this when you could trade other things. But if you're holding it as an investment, congratulations. Hopefully you are in the money. Hopefully you bought lower. Either way, I'm happy for you. And I'm with you. Like, I've been in it a long time as well, and I'm in the money now. Well, been for a long time. Let's see. Let's look at Link and Ethereum, and then I'm gonna call it a day. So Link, one of my favorite charts. Like BNB, broke long-term trend line down, right? Kind of floated through it a bit, but came back down, held it as support, and so far is trading off of it. I do like it overall, what I'm seeing. Had a ton of confluence here in this general zone, ended up respecting it eventually and came lower. And now what we're seeing from Link is it's actually respecting the bottom end of this pretty much descending structure that broke bearish. Okay, so let's just pull that out just so it's clear. So as you can see, broke through and now it's holding it, and now we're actually seeing a nice little pop. It's probably gonna, it actually looks really good to come up towards 8.72, and then maybe even challenge the high pivot at 9 and change, which is pretty interesting. And this reminds me a lot of BNB's chart, right? This is very similar to BNB's chart, as it broke its long-term descending trend line bullish, and now it had a really nice extension higher. Maybe Link is going to be doing something similar. If so, if it breaks this high pivot here, very likely to get towards at least 11 and change, towards maybe even $12. So this is a wonderful chart. If I do see an opportunity to go long here, I definitely will. I don't really like. I want to come lower. I'm not gonna take the trade now. Because I do want it to come lower, because if it were to come up and fail at this high, I want to be in a decent profit for that, right? Because then I'll want to be able to take profits from there. If I were to buy here and then it comes up towards that level and fails and then just comes down on this descending trend line, well, that could be a world of pain for me, right? So we don't want that. And we do have to respect, in the end, even though it broke this descending trend line, it's still in somewhat of a range, right? So you have these lows here, these highs here. It's just tightening now. So we're not really in anything that's indicating we're immediately going to start trending in a direction. So we want to give this some time. If I can get towards the lower bottom parts of this range and it looks like it's going to hold, I'll definitely like to take a stab around those levels, about $6, anywhere from $6 to $6.30. So yeah, I do like it overall though, like what it's possibly indicating here. And let's take a quick look at Ethereum. So Ethereum broke down, came to a minor level, so far holding it at 1220. And now a decent bounce so far. Nice bullish engulfing candle. And this daily candle is not bad as well. Definitely a continuation candle to the upside. If it closes like this, has about an hour left. And if it breaks up higher, I mean, the first major level you're going to want to see is clearly going to be anywhere from 1400 to 1430. And if that level's taken out, next major level is going to be around 1550. Okay. I'll be very interested to see if it could actually break past 1550. A little skeptical it can, but it's there. It's there. You know, this is not the most bearish structure. It did break its long-term trend line as well to the downside. So, you know, we could see that break through, and then obviously the next major level is going to be about 17,000, be a major level for it to break, and then try attack this high pivot here at about 1800. So 1700 to 1800 is going to be a major resistance level, but I would say short term I could definitely see getting towards 1550 fairly quickly, and maybe 1500. So we'll just say 1550 to 1500. But you know, let's not jump the gun. We do want to see if Bitcoin's going to have any fuel in the tank to push us higher. And so far, you know, we're seeing a nice bit of green today. You know, after the equity markets have closed, so maybe we'll have a decent weekend. But you know, who knows what will happen next week. Just be very careful once the futures for the equity markets start to open up on Sunday. All right, so I think that's everything I want to go over. Yeah. All right, everyone. Remember, be patient, be vigilant, and be nimble. Love you guys. Take care. Bye.